Special discussion today with Boris Mendes, CEO of B2 Systems. Really looking forward to this. Boris, welcome, and thanks for joining me today.
Of course, thanks for having me.
We're going to talk about your background, what you're doing today, the business financing market. There's a lot of changes technology-wise. You are like at the forefront. We're going to get into some of the things that we used to talk about back in the day. We know each other for a little while.
That's right.
So, and some advice for people in the industry, business loan brokers, and much more. So stick around to the end of the video for this discussion. Boris, first tell me a little bit about what you're up to now, what your company is. You're obviously the CEO, as I mentioned, of B2 Systems. Tell me a little bit more about you and then what you guys are up to.
I've been in the industry, like you said, for, it's been over a decade now. Time flies, especially in this industry as things move so fast. So right now, my main focus is B2 System, which is a software that essentially takes over the submission journey for both brokers and funders. That's what we're focusing on now, providing that solution to help the industry get a win-win on both sides of the spectrum.
What do you feel about the business financing market right now? Like, where's it at, and then how are you fitting into it?
Yeah, so right now the industry is growing very, very fast. A lot of people are joining the industry from the conventional side, even though we're alternative financing, but we do see large companies joining in, Square, conventional banks, other financial institutions that did not provide capital before, and now they want to provide capital because they have the market. Our goal is to essentially allow people that are in the MCA space to be able to accelerate that process, right? To modernize the industry, so to speak, to make sure that people are able to move faster at the same speed as company that's investing millions into their software, into their data analytics. And essentially that's what we try to provide to the people that exist in the industry today.
And so talk to me about 2025 so far. What has that been like for you? You're obviously starting a new venture, if you will, right?
It's been a crazy year so far. Things are moving fast. We started working on the software in 2024, but by 2025 we were essentially ready to launch, and we've been talking to investors. We brought in a lot of top level engineers. My co-founder, the CTO, he's like a genius in software. We've been putting a lot of these softwares together, things that we didn't even think was possible. We bring the expertise of the industry into it, and the team essentially make it happen. We've been seeing a lot of these things early in the year. We've launched around May and June, so that's been new. So it's been a long journey.
Yeah, very new. Just a few months into it. Dive a little deeper. You mentioned some things, kind of top level, what that is. Now, what else do you want to say about the software and how it would help brokers and whoever else, other stakeholders?
Yeah, so the main thing that we looked at when we were starting to look into software, we have built software when we were doing things directly within the industry. We were building software internally for us, what they call dog fooding the software. And we're essentially going and talking to brokers, talking to funders, seeing that they're still doing a lot of things manually. That's what we aim to replace. Anything that happens in the submission journey doesn't belong where a broker or a funder should be able to do it all. So for example, if a broker brings in a submission, the broker's main thing is that they're good at sales. All right. So when the deal comes in, the sales ends and the analytics starts. All right. They have to analyze bank statements, industry, what's the FICO, what's this, what's that. And essentially that's no longer sales. And not only that, they have to look at the matching criteria for the funders to see if who they should send it out to. They have to look at decline reasons, resend it out to new people, called the funder merchant fit. That's essentially never good when it comes to brokers. And that comes from funders. I've spoken to a lot of funders and they told me, only about 15% of deals that comes through them, they provide an offer on. Right?
15.
So 15%. And at the very best, 18, right? Which is a very small percentage of deals to provide offers on. And what's the problem there is that brokers don't have access to software and technology to be able to get the deals to the right people. Not only that, but that's part of analyzing the bank statements, scrubbing it, knowing what's on it, right? Software is always going to be better than humans. Humans make errors, they miss stuff. You end up sending it to the wrong funder. You send enough wrong deals to the wrong funder,
gonna cut you off.
They cut you off.
Yeah.
That's right.
They get sick of you first, and then they tell you, and then they cut you off. Yeah.
We essentially took over that part, right? The bank statement parsing. The second part, which is the most powerful part, is we built a software that essentially understands what goes on with that data. And that's the part that we even service funders with, because the funders, they take the data, they have some parsing technology. I would hope so as a funder. Once they get that data, they have to understand the data to see if it's a fit with their underwriting criteria. Our software does that. We call that our underwriting engine or matching engine. And it takes in all the data. If it's a funder, it matches it with the funder's underwriting criteria to see if it's a match or what percentage of a match it is for their pricing underwriter. For a broker, it does the same thing for, the 40, 50 funders that they have, but we also provide those relationships right on the platform. So they get access to the top 40 to 50 funders in the industry.
Do they have to sign an agreement separately, or that's already somehow agreed to, that those brokers can send the deals and kind of be signed up with those funders?
Currently, everything is signed up through B2 systems.
Okay, got it.
So essentially, they're going through the B2 system as the ISO on record, and everything is being funneled through B2 systems.
Got it. And so essentially, you can make adjustments whenever underwriting guidelines change for the funders, everything else to make sure that it stays as accurate as possible for submission to the correct funder.
That's exactly right? We have machine learning and AI in that sense that looks at and analyzes decline reasons, and it adjusts the funder's reasoning in the back end so that it sends more deals to a specific funder that are similar to what they've approved in the past, and it sends less deals to what they've declined in the past that look similar to what they've declined.
Okay, very interesting. So if it's, declined because of time in business or background check or whatever it may be, then that's accepted, uploaded, whatever into the software, and then it keeps that on track or on record, and then makes the adjustments going forward for newer submissions.
That's right. Yeah. Right now, for the background and the credit, that's not something that we offer organically, like internally from our software. But for funders that are with our software, we use their, let's say, Experian plugin, API plugin. The nice thing is that we didn't want to create a CRM, right? Everybody has their own CRM, all their operating system that they like to operate on, right? The whole company runs on that. So essentially, we just plug into whatever they have.
Okay, I wasn't aware necessarily of how that worked. So you can integrate into CRMs. You don't have to mention any company names, but are there some that are easier than others because of whatever the APIs are, or however it's able to connect? Or
yes, we've seen some that are easier than others. Most of the brokers and funders that we've seen, they essentially use pretty large software companies or CRM companies. So essentially, they have an API page where our technical team is just understanding the API.
Okay.
And even at the very rudimentary level, CRM, they have webhooks. So if we can't do it through API, we do webhooks. And you do have access to a platform, where you can go and look into your data directly if you don't have API plugins, right? So for an enterprise level or custom enterprise, like most of our funders, they just do it via API. So that way they never leave their operating software.
whatever they're working with now, they don't have to leave it, right? They can still use it, and your software integrates with that. I think that's huge because people don't want to just change that easily. If they've been around for a while, they don't want to leave their CRM.
Yeah, and that's what we figured as well. We didn't want to recreate anything they already had. We're essentially just seeing it like, it's like agriculture. You have people that are doing it by hand, and you have doing it somebody that has a machine. They're still doing the same thing. The machine is just a lot faster. And over time, that's been the difference between Rome and whoever Rome took over.
That's a good way to put it. All right. So talk to me about pain points and what brokers are experiencing and how, again, maybe a little bit more into the flow of things and how you're solving those pain points.
Yeah, so the first thing that we've noticed, and we try to solve it internally when I was in a funding house, when I was in a brokerage, is the speed of the manual work. You're looking at a broker, file comes in, they have to look at the bank statements manually. They have to take in those bank statements and they have to look at funding criteria manually. They have to input the approvals and the declines into the CRM manually. And even some of them have some automation, but we've done a case study and you're looking at about 30 to 45 minutes per submission that they're spending on deals. It's a huge bottleneck when it comes for brokers. When a deal goes through to the funders, they have to take in the approvals and the declines, log it into the CRM. So that takes time as well. Right? So that whole time, you're looking at, depending on how big the brokerage shop is, you have some brokerage shop, if you have like 2-3 salespeople, probably that's the beginning of scale.
Sure.
Right? Usually the brokerage owner is the one doing this. right? He's spending all his time doing the processing. If you're doing 20 plus submissions a week, that's a full-time job. You don't have time to scale. You don't have time to train more salespeople, so on and so forth. You might hire a sales manager, then they're not doing a good job. So the owner is always going to do best when it comes to that. The more you scale from there, right, it's all bottleneck. So along the way. And those are different ones. So we aim to really not only reduce the bottleneck, but remove it entirely. We do provide program like a entry tier where people could just do document parsing because some brokers, they may not be ready for their whole submission journey to be taken over by a software, but we do provide the parsing only where just the bank statement data is scrubbed and then sent back to them, within a minute. So that's possible as well. But for the funders, we see something a bit differently, right? Because a lot of funders, they have technology. A lot of times they have parsing. Surprisingly, when I started talking to funders, they still have a lot of people managing the data, managing if it's a fit, managing if this is going to the right people. Because once that data is scrubbed, you still need to understand the data. It's just raw data, right? And that's where the parsing companies, they're very useful, obviously, but there's a step further, and that's understanding the data and if it's a match with that. So for us, we cut that processing time for funders, which typically is about 20 minutes, because it's faster than brokers, but you're still looking at 20 minutes per files. So the bottleneck is if you want to do some marketing, you want to advertise on FunderIntel, you want to say, hey, we need more people, we have new programs, more deals that you get, guess what? You got to hire and train new people now. That's your bottleneck. With our software, it eliminates that entirely, and you have free range to scale up to wherever you want.
That's amazing stuff. I think that's kind of where things have been going, and it's now for people like you can solve those problems in the best way, the most efficient way, are going to help people run their business better and then obviously drive revenue.
Yeah, and we're seeing the industry going towards that direction. I think it's now ready. If we had done this 5 years ago, I don't think the industry would be ready.
Right, yeah. It takes like certain learning from the audience, right? From these brokers, from their, office managers or staff or whoever. Just like, using a phone to pay for things, right? There's technology, there's things that people have to get used to.
That's right. Like, if you look at Amazon, for example, right? In the journals, they used to always say, like, there's no way people would put their card online. There's no way people would go online and shop. Early 2000s, by mid to late 2000s, everybody was having their card online, being able to buy things from Amazon. Same thing with the phones. Like, we see technology move very fast. And I think it's time for the merchant cash events industry to start moving towards that direction as well, if we're going to not be taken over by larger companies.
All right. So switching gears a little bit, Boris, we worked together back in around 2018, something like that. I was working for a funder. You were working with your brother, and you guys had a broker company. Back then I started a mastermind for ISOs, the owners of ISO companies.
That's right.
Did it for a little while. We had like 6-7 guys, signed privacy agreements, that sort of thing, to where you can talk amongst each other safely, exchange information, try to help everyone really grow their business. Tell me anything that you might remember and how it might have propelled you. It was a little while ago, and then we'll get into a couple other things.
Yeah, definitely. And I think that was a great time because it gave us some ideas as well. When we started this, it was for the mastermind, right? Like you said, one of the main things that introduced us to other brokers that were in the industry even before us, and they had already certain things established. So we were able to see kind of behind the curtains further down the road for us. And what that revealed was mostly the ones that were doing the best, the most volume, they had two things in place. They had systems and they had some automations. And I remember particularly what stood out to me the most was this one broker. I don't remember who it was. What stood out was how he kept talking about how systems don't go to sleep, systems don't go home, right? It does this, it does that. And, it kind of triggered something in us to look more into a systematic approach of scaling the business, having these systems in place. And two, the automation. He said that the main thing that he always focused on through his CRMs, through everything, was how can he automate everything that's being done in his firm. For us,
I remember who you're talking about.
You remember a little bit? All right, yeah. In a way, you could say that's kind of like a seed for B2 systems today.
Yeah?
Yeah.
Okay.
Essentially B2 systems are all the systems that we put in place, and then we've automated it and added a layer of software within it to make sure everything runs automatically. That's why it's called B2 systems.
Okay. There's at least something possibly that came out of that. That's good.
That's right. I would say that, that may have been the beginning of FunderIntel too. I mean, essentially that's what you were doing. You were putting people together already.
That is true, because there wasn't like anyone in the industry that I knew that did that for a group of ISOs. As far as being on the funder side and me being an ISO manager.
Yeah, no one did that at the time.
It was a great experience. experience. And so, from that, what would you tell that you've learned in the industry? What would you tell your younger self now that you're at this point?
So the most important thing is that anyone starting into the industry, anyone starting into the MCA industry or financial service industry, alternative business funding, anyone starting there, I would say the number one thing, learn more from existing companies. Stay for a longer period of time. If you're going to start your own firm, learn as much as you can about what makes that business, what makes them great, what makes them work, what systems they have in place. And most importantly, if you want to join the industry, make sure you work for a company that's ethical. All right. You want to make sure that you look at the ethics of the company, because that's what's going to basically be your foundation for whatever you're going to do in the future. You might go into another company and they realize that you're perpetuating something that you picked up from the last company, which was bad. Now you can't even work at a different company, let alone start your own. Right. We've seen, brokers and funders kind of come in and out because of ethics.
That's a lot of what, like just on FunderIntel, we manually approve people when they sign up. A lot of people don't want to give their real identity because they know of whatever they might be doing could affect them. And so that's kind of one way for us to kind of root that out, at least prevent it to a certain extent, on our site. But obviously it goes on all the time for just different business practices and so forth.
Yeah, exactly. And for us, start early on when we started our company, we were financial services, right? B2 Capital back then, we added MCA within it, right? We were doing a small portion of MCA and we've been doing it ever since that time. And obviously now we switch entirely into software. But when we were doing it, we provided capital to different parts of the industry. Right? We did commercial financing, residential projects financing. We did a lot of different things and we added MCA into it. Most important thing in the industry is always about obviously the relationships that you gain. And I would say that that's true in any financial service industry, who you work with, right? We've seen funders, investors, family offices do certain, questionable stuff. And we had to cut the relationship and tell the clients like, hey, we're going to have to move you somewhere else because of this, because of that. But we've seen that happen. And even as often as now, we have things in our software now that if we're managing the submission and sending it out to the funders that we have listed within B2, we can track what happens to that application. So if that application goes out and we get resent, we can see that. We can see certain things, and we have, terminated certain other agreements, even with large companies that everybody knows today, that they had some problems. And that's part of the backdoor, because we've even told them like, hey, this is happening and here's the proof. And they're like, oh, we can't really say if it's happening for sure. We'll look into it and let you know. We call back a week, 2 weeks later, what happened? It's like, we can't really tell you. It's like, man, come on. Like, if we're helping you.
They're saying they might have done something, but they're not going to tell you what they've done.
Yeah, they're not going to acknowledge if the backdoor was true or not, even though we're giving them
protect themselves.
Yeah. So when it happened a couple times, 2 to 3 times, we discontinued the relationship, right? But for us, we're able to track it, sure. But if it's happening in large funding companies, there are certain things that need to be put in place for that, right? And that's why if you're working in a company like that, let's say you're a young broker or you're a young ISO rep, you want to make sure you're looking at the ethics. You want to make sure you're looking at what's going on.
Agreed, 100%. And you kind of touched on relationships. One of my questions is that how would you describe your mentality on the relationships? Because it affects you long term.
Yeah. Relationships are paramount. The whole thing about business, I know that the famous saying, life is short.
Right.
I'd say that life is very long, right? Especially in business. Business is long memories. So the people that you do business with, some of the funders that we partnered with 10 years ago, almost 10 years now, we still do business with them. The reps changed, people changed, but the business and the history that you built are still there. Some of these reps, they go other places and we maintain relationships with them. Relationships are very, very important. I would say that certain things change when it comes to funder ISO relationship, but the relationship that you build with the clients, we were talking about brokers that are in and out. Sometimes they're just trying to get a quick buck, right? We've met people, the brokers that they were like, oh, I barely refi. I let the funders handle that. It's like, that's insane. Big portion of our business is repeat business. We've had funders, clients that we've funded for close to a decade now that we're still funding today.
They also will be more favorable on their offer terms when they know you better. They can trust your deals. So they're more willing, even if they don't give it up front, if you say, hey, well, actually I really need some more money on this, or lower factor or longer term, whatever. We're specifically talking MCA or revenue-based financing, those funders are going to work with you more when they like you, know you, trust you.
I would say one thing that is changing in the industry from like, let's say 5 years and on ago, I would say that the relationship is more now based on data more than ever, right? So funders, whereas before I could call the funder and the relationship, you could tell like makes that big difference on the type of approvals you can get and so on and so forth. Now, I would say is more of the data. How many deals are you sending that are getting funded? How many deals are you sending that are even getting offers? A lot of times the funders now because they're moving towards being more data oriented, they're moving towards more technology and looking at who matters more to the company. And I'll say that the relationship is becoming better based on that than it is than just being an ISO or an ISO with that funder.
Yeah, I mean, you got to produce, right?
You got to
Bottom line is
produce.
At some point, you got to fund deals and, not just shotgun everything. So your submission to close ratio has to be high.
That's
Not
right.
1,000 deals in a month and you close one.
Yeah,
So-
that's insane. And the crazy thing is a lot of brokers that we talked to, and I didn't know this until we started doing the software, but a lot of brokers are still doing the waterfall where they always send their top funders, they always get the deal. And then they drop it to the next tier and the next tier. I mean, that's a very old way of doing something, right? No technology at all, no insights, no data. Eventually these relationships will be lost.
No, that's a fair point. People kind of get stuck in their ways as far as how they do things.
Yeah, definitely.
Let's talk about regulation here. How has regulation, specifically sales-based financing, revenue-based financing, MCA, are all kind of the same thing under a commercial finance umbrella, according to the states nationally, state by state, they put in commercial financing laws over the last 5, 6, 7 years, and some are more restrictive than others. How has that affected you in your business? And then what else are you hearing out there?
Yeah, so I would say that I have to give props to the revenue-based financing industry on that. Since we dabble in different financing, the MC industry is probably the one that moves the fastest. And that's where being partnered with the right funders come into play as well, because we see funders adapt very well, very quick to whatever's happening, right? We saw it during COVID, where immediately they put out lists. As soon as something happened, as early as like 2-3 days ago, like a disaster or something, immediately they put out a list like, hey, these industries we're not funding anymore. It's like, hey, this has just passed. By this date, this is what's going to be the new norm, right? So, and I feel like the funders help the brokers adapt very well. For us in the industry, we haven't seen that big of a change that whereas the broker or the software company has to adapt so much because of that, because the funders do such a great job helping the brokers adapt. So I'd say that that's where the MC industry kind of stands above the rest.
Now that Texas's law goes into effect September 1st, this just these last few days, as you well know, people are offering now new products. So these alternative lenders offering revenue-based financing forever, MCAs, now all of a sudden they're going to offer term loans in a state because things are kind of forced upon them, right?
Mm-hmm.
So in the long term, they still may be able to offer MCAs, sales-based financing in Texas, if they can find a proper way to structure things. But now the quicker decision is to offer a totally new product than they've been offering.
That's right.
Which is interesting in the sense of, okay, well, you could have been doing that the whole time, but because of terms, because of how their business works, and the math has to make sense, right? The financing has to make sense from their origination, their cost of capital, and you go start from there, and then it works its way up all the way to the credit risk model and whatever else they need to do term loans in that state. So what else would you want to add, about you, B2 Systems, anything else?
Yeah, I would say that the way the market is moving, right, overall, to add a little bit to what you were saying here, it's good to see that funders are willing to take the lead into providing something to continue funding a state so they don't lose a state. And I'll say that that's a sign of the industry adapting and growing, whereas before, that would not have been the case. They would find a way to try to still provide MCA or just not fund the state at all for maybe a few months before they could figure it out. And I think it's great seeing that people are pivoting so well. And I think that's a sign that the industry is growing very fast. Talking to investors, for example, we get that question all the time because that is something that's new for us as well, right? Getting all the investors and raising capital for the software. They ask us all the time what's going on in the industry. And part of that is that the industry is able to grow and pivot so well to continue to provide capital to the business owners. No matter what's out, what we see out there, the data speaks for itself. We've seen data being put out saying that, let's say by Square, for example, putting data saying that the businesses that have taken capital for like an MCA type of capital have grown faster than the businesses who have not taken capital. We've looked at that data internally ourselves when we were financing MCA, and we see that as well. We see people go from $20,000 a month to, by the end of the year, but while we're funding them again on the renewal, right? So the renewal is important. Now we're funding them 80, 100,000. That's a reflection of their monthly revenue. Their monthly revenue is growing as a direct result from the capital they've gotten. Now, the key thing is that the broker must provide the right type of capital, right? They can't just provide any type of capital. When they're refinancing, they must always look to be able to provide something better on the refinance. Why? Because the risk is now lesser than it was the first time. A good company, a good funding company, a good underwriter will always look into that to see like, hey, we funded this person before, we're going to refinance and provide something better. Because if not, then it will go to the next company. So I think the industry is growing in that sense. So we're seeing people doing that. Companies and funders that are not doing that, I think that they're going to get beat by the companies that do continue to build off that relationship, not just with the broker, but with the direct client, with the payer-funder relationship. And I think that as things grow, obviously the companies with the most resources will move faster, right? So that, for us as B2 System, that we provide enterprise level software to companies that are smaller, to brokers. I think for the first time, brokers don't typically get access to the top level software for them to be able to grow, because people put more emphasis on the funders. Even smaller funders that are probably doing 500 to 1,000 submissions a week to larger, we're providing an outlet for them to be able to have access to the software so they could move as fast as the large guys who've invested hundreds of thousands, if not millions, into software. It's almost like a win-win-win, right? It's like a three-way win. So it's a win for the broker, a win for the funder, and a win for the merchant at the end of the day.
Which is really the ultimate point here, right? To get businesses the capital that they need, and it's the biggest engine of the economy. So, and then obviously, people have to make a living, so brokers and funders and everyone else that's their focus. But at the end of the day, businesses aren't needing capital. If they can't get it, then no one's going to win, right?
Exactly. And the more competitive the capital becomes, the more everybody wins, right? Because we're seeing this now. For our platform, we have about 40 plus funders, right? And we're seeing every now and then their term gets longer. Before it was, anything over 12 months, it's like, oh man, this is an amazing funder. Yeah. You don't really see funders over 12 months. Now, anything over C-paper is becoming a norm to provide 13 to 15 to 18 months. And we're seeing that they're pushing that boundary. Rates are becoming lower, the buy rate, they're lowering themselves. I think eventually we'll see even the high risk funders, they move that boundary, and then those top tier funders are going to move even lower, competing directly with conventional financing eventually. And I think that all happens because of software. That all happens because of the amount of data that's available now and how they're seeing the market interact directly.
Yeah, you hit it right on the head in the last part. That's exactly what's going on, because the bigger fintechs that have come through in the last 8-9 years now, that they're using their payment processing as the main data point, right? So they use Stripes and PayPals and Squares. So they have the payment processing. You have almost everything you need.
Exactly.
And that business is not going anywhere because you have their processing. So
I think the industry is moving towards the right direction. We just got to make sure that it has all this stuff to be in the modern times. A lot of brokers and funders are still running as if it was, 2010. They're still not trusting other software. They're still not trusting people. We've seen the CRMs being accused of backdooring.
Yeah.
And I think it's insane, right? Because things like that, there are sections in every industry. There are sectors. And these sectors, as long as they do a good job, it supports the rest of the industry to continue to grow.
Well said. Well, Boris, we are just about out of time, but I appreciate you joining me, and a great conversation. Hopefully you folks gained some knowledge. If you want to reach out to Boris, we'll have his contact information, of course, down below, and then we'll catch up soon enough.
Definitely. We'll see you at the next FunderIntel event.
That's right. Our mixers, probably by the end of the year, but always good having you there. Thanks again for coming a couple weeks ago.
Of course.
So with that, we'll see you next time.